The mainstream media spent all weekend telling you a ceasefire that never existed. They wanted you to believe a peace pivot was coming, so you dump your dollars into their hands. But while retail was buying the hope, the smart money was watching the US delegation leave Islamabad, Pakistan without a deal. The ghost blockade is back. The math has shifted, and if you're still trading last week's headlines, you are officially exit liquidity, even though we had an assassination attempt on Trump on Saturday. Everything starts with the dollar index. Right now, DXY is sitting at 98.5, propped up by the geopolitical floor. With the Islamabad talks in the trash, as long as DXY stays above 98, 99 area, we should be expecting a higher for longer narrative. The dollar isn't just a currency right now, it's the anchor of the G8. We have to understand that we might be looking at the pound and we are really looking at pound weakness. So to trade this, you need to know the hierarchy. Here is the G8 ranking. At the top, I have the USD as the 7 king, followed by NZD, our inflation alpha, after that massive 3.1% CPI print. In the middle, we have the CAD and Aussie are resilient thanks to 4.7% wage growth and energy export. And but look at the bottom, I have the pound is weakening despite good jobs data because of the COT exhaustion. The the euros and the Swiss are energy victims, and the yen also is an energy victim. Okay, but it's the ultimate sell due to massive yield gap. We don't guess. We pay the strongest against the weakest, and you've seen what is the strongest and what is the weakest currently right now. I'm really focused on the pound because of their central bank policy meeting, which is this week. So whether they are bullish, whether they are negative, you'll be expecting a sell-off from the pound at some point. So the biggest trap on this board is the pound. Last week, the UK jobless rate crashed to 4.9%. Retail is screaming buy, but mechanically, the pound is at 98% speculator index. It's a full house. There are no buyers left to push the price higher. So this is why we are playing the exhaustion fade, and I'm looking at the GU, which I expect a short from here, or if price should go higher, no problem, I would see a short from this other area. We also have GA. And this I've been talking about this for some time, so we'll be looking at price heading to this point, and then we look for one more push to the downside. Okay, so we also have the pound card, which I'm not sure, it's not too clear as to what it wants to do. We have this structure lower, we have this other structural points. So if we should see a push one more time, do a pullback, then we can still look for a short on the pound card. Our high conviction plays are at the top of the board. First, we would like to long the USD Swiss because this is a breakout structure on the 4 hours. On the 4 hours, we have a breakout structure, so I am looking at this. Why? Because we are pairing the yield king against the Switzerland bank that are actively printing franc to keep their currency weak for exports. We look at the Aussie yen, which we've been talking about. This was the zone. Yes, it's mitigated to me, but it's still on the list. I have the CAD yen to go higher. Alright, so I also have the stock indices right here, and it's quite interesting. As we can see, we have longs. This was we are bullish, we've been high and we've been low, and this is a high. I think it will still continue going higher. There is a demand it's never used last week, so I expect this demand to be mitigated. But should it go more, I would like to see this demand mitigated. So these are just the two zones I'm looking at. We are entering a 72-hour gauntlet with the Fed and the BOE. The news will be loud, traps will be everywhere, but remember, the gold at 4,700 is the liar detector. It knows the piece was a fake. Trust DXY Anchor, follow the power rankings and stay certain. I'll see you on the charts.